Hello traders and welcome to another weekend's market forecast video. So hopefully everybody has been having a great weekend and we are approaching the third week of December and we are going to have, as you are aware of, the FOMC meeting on Wednesday the 18th of December, in which obviously if you are following the news overall, it is expected to have at least a 25 basis points rate cut. And we can see, starting with the dollar index as we usually do, the market is getting ready for a move to the downside in the dollar, and this should be the next move and our bias into the next week ahead and into the end of the year. So we can see that the dollar is doing an overall double correction to the downside from the highs from 22nd of November in the short term, and this will be the next move that we can see ahead and the bigger, let's say, value across the market, and this will have a domino effect into various instruments. And of course, this is what we are also explaining to our members, how you can relate into certain periods of time, for example the dollar index with other related pairs, and also when this relationship doesn't really apply, because we have both scenarios that not always you have all the correlations intact, and this is what distinguishes the good traders from the bad traders in this industry. So of course, just for you to know that it's not always the same idea. So that's why by being a member, you are actually getting most of the value of our analysis and trade recommendations. So overall, that's what we have to say for the dollar. Another move to the downside should be expected next, heading into the FOMC next week. Also, a quick reminder here for our upcoming exclusive market forecast webinar that we are going to host on Friday the 20th of December, which is into this upcoming week at 5 p.m. GMT. We are going to explain to all of our members our views of the market heading into 2025 and what to be looking for and why. We are going to explain the most probable path across the market on from Forex to commodities to indices, cryptos, ETFs, metals, and everything really that we can see. And obviously we are going to plan ahead of time as we usually do, and to explain to our members what to be looking for, whether somebody is within a longer term investment or whether is trading in the short term. So we are going to explain the market based on each quarter of the year and what are the probable scenarios that we can see playing out in the market, and obviously then those events will have an impact into certain news that they will be coming out, because at the end of the day our members know that the market is first technical and then fundamental. So by the time most of the people are aware about certain news, the market has already moved at least 70% of the expectation of the expected move. So you need to know really the market in more detail and technically, and when the market is at certain areas that we can see a decent reaction taking place. So this is just a reminder. Of course, we also still have the end of the year promotion. You can check out the link in the description. So if you have any questions, email us at support@riforecast.com and we'll be happy to help you out to become a better trader or investor in 2025. Dollar yen, the market has moved as we expected back to the 152.53 area. If you go back and watch our previous weekend's market forecast videos, you will see that we have been expecting from these areas at the 150 to go back to the 150 to 53. This is exactly what happened once again. So overall, we do not like to trade this pair at the moment because it can get sideways. This is the expectation heading into the next week, some sort of a reaction to the downside. But of course, as we are explaining, we will not be interested in trading this pair, because this move can get choppy and there shouldn't be any significant move for trading, so it can get volatile and go up and down within sideways to lower correction. So in our view, we wouldn't be saying that is something interesting for trading. For the euro, as we have previously explained, from these lows right here, we expected the market to start a corrective bounce to the upside towards the 108 area. We have completed our first move here to the 106,300 area, and now we have entered the corrective phase right here, which we are expecting within the week to start heading to the upside and the euro to eventually reach the 108 area. So this will be our expectation. We are biased to the upside for the euro, and this is the next move that we are looking for to see in the market in the upcoming week. The pound, similar idea. We have expected this move to the upside exactly at the 128 area. This is where the market provided this corrective for now reaction to the downside. So if you have been following us for a long time, and also in the previous weekly market forecast videos, you have been aware that we have been biased to the upside from this area to the pound dollar. So we have reached the 128 area. So this reaction was kind of expected, and now the market from here, it should find soon support for another push to the upside, and we can see a double from these lows to the 129-ish area. So this is the next move that we can see in the pound heading into the next week of trading. As you have been aware of as well, we have expected the move to the upside from this area right here from the middle of November. Then we have expected some correction which took place at the end of November, and then we have seen this accumulation price action into the last 2 weeks or so, and we expected the market to give us a break to the upside, which is exactly what happened during last week. The market moved from the 2620 area to the 2724, and then the market provided us with another decline and corrective structure right here. So overall the market is choppy and moving to the upside still, so our bias remains to the upside in gold, which we are expecting to see soon to find the support for this move to the upside. So this is what we are looking for gold. Is still bullish, especially above the 14th of November as well as the 26th of November secondary low within this cycle to the upside that we can see. Obviously the risk to reward at this point gets very poor, so you should be doing your due diligence on how you are trading gold. Of course, for our members, you are already knowing what to be doing in certain markets, so we are not really trading gold at this stage. So if you become a member, you can ask us any questions during our live sessions or anytime really, so we can explain to you more on how to look at the market the right way and which instruments to avoid trading and which ones are worth trading with based on risk to reward and many other factors that we don't really explain here on YouTube. So feel free to check us out. The link is in the description, so you can join a professional service to help you with your trading. For oil, we have also made the midweeks video, and we have explained why the market should be doing a double correction to the upside from the 18th of November's lows. And this is what we have seen during Wednesday: a move to the upside, correction, another move to the upside to the 71.42 area. So we are expecting more upside and oil to remain supported to enter the area of 72 and 75 next, and we should be heading here into the next week of trading before any next reaction can take place in the market of oil. Natural gas, we expected the market from these lows from the 4th of December to start another cycle to the upside ideally to reach the $4 area. We have completed the first part of this cycle. We are seeing here a small pullback taking place in the market from Thursday the 12th of the month, so we can see something like this. Soon we are going to find support and we will see another push to the upside in natural gas towards the 3.8 and $4 area. So as far as we stay above these lows from the 4th of December, we are good to go up, and this decline here, it should be just a simple correction for another move to the upside in the market for natural gas. And heading into the indices, the S&P 500 SPX cash index, we have seen last week overall a very slow market, just a consolidation taking place. So this is part of a corrective structure for another push to the upside in the S&P 500, and this is what we can see happening into the next week of trading. We can see the market at the 6,200 area or so, but of course at this stage someone should be very cautious with the risk management, because this is an elevated market at this point, but this price action is still going to be just a correction for this push to the upside for the next week. Bitcoin in the 4 hours still sideways to higher. We have been expecting some sort of a pullback to happen during the last week or so. Of course, the market remained kind of flat and to the upside. It doesn't have to do any bigger pullbacks in a bullish market, especially when you are looking at a parabolic instrument. So there is a difference between different types of instruments. So this is what one thing that we also explain and teach to our members, and this is something that most of traders in the retail trading industry, they are not aware of. So you need to really know the nature of the instrument and the cycle you are within, so you know what to avoid to be doing. So overall for Bitcoin, we don't really have to see this move to the 90k area. We can still be good to keep going to the upside, and anyway our bias is still to the upside for Bitcoin, and we can see the price heading above the 100k very clean and very clearly, and we have more room to the upside. This will be our bias still for the next week and even the month of December in general for the time being. So that's what we have for this weekend's market forecast video. So hopefully you found this useful. Please leave us a like so you can help us with the YouTube's algorithm to push our content to more people and traders, so we can all help each other out to become better and get the right information and of course the truth out to these traders, because within our service we don't really provide anything that is far from the actual market truth. And what we mean by that is that we only provide the actual facts of the market, and we don't really use any nonsense, let's say, indicators or anything like that in our analysis. This is purely because of skills and because of experience, and not really something that you will find across the competition. And obviously you will see that in the upcoming content we have planned for you guys, and get to know us a bit better. So for the time being, you can check us out with the link in the description. We also have still the end of the year special offer, which it's a massive value for anyone that wants to take it, because you are going to get also with the yearly membership 3 months extra, and also you are going to get our educational video series course that we are going to launch sometime in January, in the next month, and this will be provided to you for free as well if you get the yearly membership by the 31st of December before the year's end. So if you have any questions, send us an email at support@riforecast.com. We'll get back to you within the day. Enjoy the rest of your weekends, and we'll see you in the next video. Take care.